Welcome back to City Education, the channel for education in all forms, shapes and sizes. In our previous video, we learned what bank reconciliation is and why it's important. Today, we are taking it a step further, exploring supplementary cash books and bank reconciliation statements in depth. We'll look at a few examples together, filling in both statements while explaining why each amount goes away. Now, before we get into it, let's touch on the supplementary cash book once more. A supplementary cash book is used to adjust your original cash book balance. It records all transactions your bank has processed that you haven't yet entered. Typically, it includes interest income, EFTs from clients, debit orders, client reversals, or bank errors. By updating these, you get the corrected or adjusted cash book balance. Now let's look at a few terms you are required to know before filling in your cash book or reconciliation statement. We'll begin with an outstanding balance. Now, an outstanding balance is the amount still owed or pending that has not yet cleared. Moving on, we have a practice error. This is an error made by the law firm in recording transactions. In contrast, we have a bank error. This is a mistake by the bank, such as processing payments from the wrong account or posting incorrect amounts. From there, we have reversed payments. Now, this happens when a client cancels or reverses a payment previously made to the firm, often due to disputes. After that, we have scheduled payments. Now, a scheduled payment is a payment set up to occur on a future date. It is already recorded in the cash book, but has not yet cleared in the bank. From there, we have balance brought down. Now, this is a closing balance from the previous period carried down as the opening balance for the new period. In contrast, we have your balance carried out. Now, this is an amount remaining at the end of the current period, which becomes the next period's balance brought down. Okay, now let's practicalize this. Let's use the following example. Your business cash book on the 30th of July 2023 reflects an overdraft balance of 64,722 Rand. The bank statement balance on the same date shows a negative balance of 81,086 Rand. A comparison of the cash book and the statement reveals the following. Before we go into that, remember, since the cash book and the bank statement are not balancing, you would have to balance them out. That's what bank reconciliation is all about. Now let's begin with our first transaction. A reversed payment from a client of 8,388 does not reflect in the cash book. Now, this is a payment that was previously received but then reversed, meaning the money is no longer in your account. Since it wasn't recorded, your cash book is overstated. Now the action you will take here is to subtract 8,388 Rand from your cash book. This simply means the amount will be inserted on the credit side of your supplementary cash book. Now let's rewind a little. Remember that if balances on your bank statement and your business cash book do not balance, or in the case where you are using a trust in your trust cash book, if both do not balance, you have to create firstly a supplementary cash book followed by a bank reconciliation statement. The supplementary cash book will be in the structure of a T account, meaning you'll have your debits on your left and your credits on your right. And then the heading supplementary business cash book of July 2023 must be on top. If you're working with a trust cash book, ensure that you state that it is a supplementary trust cash book. That is important to note. Your business reconciliation statement, on the other hand, will have 3 columns. The first column will be used to indicate the description. For example, your balance, your bank errors, and so on and so forth. The second column will be your debits, and the third column will be your credits. Another thing to remember is that the bank reconciliation also comes with its own heading. Now the heading will sound something like bank reconciliation statement as at 30th of July 2023. This is because the question we are dealing with deals with the bank statement and cash book of the month of July. Another reminder is that in the cash book, the debit side carries monies that are favorable to your account, and the credit side carries monies that are not favorable to your account. When it comes to the bank reconciliation statement, on the other hand, the credit side carries monies that are favorable to your account, and the debit side carries money that is not favorable to your account. Now back to our example, we see that we are dealing with an overdrafted amount, meaning it's money that is not favorable to both our accounts. This means that in the cash book, this money will be recorded on our credit side because it's not favorable, and in the bank reconciliation statement, it will be recorded on the debit side. Now let's go back to our first transaction. A reversed payment from a client of 8,388 does not reflect on the cash book. As established, this will be placed on the credit side of the cash book. Transaction 2 is as follows. Bank charges of 1,809 Rand have not been entered in the cash book. Now, bank charges reduce your balance, and since they are not stated in your cash book is overstated. So this means they will be placed on your credit side because they are subtracting your cash book balance. Now let's move to transaction 3. According to transaction number 3, interest of 713 on the overdraft has not been entered in the cash book. Now, interest on an overdraft is an expense that reduces your bank balance. This means, yet again, your cash book is overstated because it hasn't been recorded. Now, because such interests reduce your bank balance, they will be recorded on the credit side of your cash book. Let's move on to transaction 4. An EFT transfer from a client in payment of your fee account of 7,980 Rand has not been entered in your cash book. This is a deposit into your account that hasn't been recorded. This time, your cash book has been understated. Since this money will increase your balance, it will be recorded on the debit side of your cash book. Now, if you look into the first 4 transactions, you will realize that all these transactions would typically be found on your bank statement and are most likely to be missed in your cash book, hence reconciliation is taking place. Now, let's move on to question 5. Here the bank incorrectly debited your account with 2,169 Rand. This means that the bank made a mistake and reduced your account balance when it shouldn't have. Here, instead of the cash book, we'll look at the bank reconciliation statement. Because the bank took money away from you, you have to correct that transaction by placing it back into your credit side. It debited, now you have to credit the amount. Now, if it was tables turned and the bank had incorrectly credited your amount, you would have to debit that amount. Now let's focus on our current situation as is. That means we'll take this 2,169 and place it on our credit side because money is favorable to our account. Now let's go to transaction 6. A payment authorized from your trust banking account of 7,301 Rand has been incorrectly paid by the bank from your business account. This simply means the bank incorrectly took money from your business account instead of your trust account. As a result, it reduces the balance on your business bank account. Now, like the first transaction in number 5, we have to correct it in our business reconciliation statement. Because the bank took away money, meaning debited money, it has to be credited to show that an error occurred. Now, the description will be bank error, same as number 5. And then the amount of 7,301 Rand will be credited. In other words, by stating on the description that a bank error occurred and then crediting the amount, we are trying to show the bank that they incorrectly removed money from our account for whatever reason. Now that money must be refunded back into the account. Moving on, according to transaction 7, a deposit of 5,317 Rand has been incorrectly recorded in your cash book as 5,173. This means that you recorded less than you actually deposited. the cash book is understated by the difference. Now what do you do in this case? You simply go back to the supplementary cash book and state the description as practice error. You or your firm are the ones who made a mistake when recording. Or let's digress a little to the rules of practice errors. Now when the firm is receiving money and that money is incorrectly recorded, in such a case, because the firm is receiving money, the correct money or the correct amount would be debited and the incorrect amount would be credited. Now if tables turn and the firm had to pay money, when it comes to practice errors, the correct amount would be credited and the incorrect amount would be debited. Now back to our 5,317. Now because this money is a deposit and money is coming into the firm, the correct amount, which is 5,317, will be debited. And the incorrect amount of 5,173 will be credited. Now transaction 8. According to this transaction, a future dated payment totaling 6,432 appears only in your cash book and not in your bank statement. Now these are payments you have recorded, but the bank has not yet processed. Remember, when it comes to law firms and businesses, some transactions are due on certain dates and must be processed on such dates. Hence, you find that future dated payments will never be reflected on a bank statement until the day the money is due. Basically, the transaction of 6,432, which is a future dated payment, will simply stay on the cash book as a scheduled payment. And it will be recorded on the debit side because the payment is not yet due and the money is still in your bank account. Now let's move to transaction 9. According to transaction 9, a deposit of 10,000 is not reflected in the bank statement. This simply means you've recorded this deposit, but the bank has not recorded it yet. This is a deposit in transit or an outstanding payment. In simple terms, such payments are, for instance, money that it may have been deposited on the 30th but will only reflect after 3 days because maybe it was during a weekend or the bank regulations require a 3-day waiting period. Now this transaction will be recorded on the bank reconciliation statement as an outstanding deposit because the money has been deposited but has not yet reflected on the bank statement. Our transaction 10 is as follows. A payment of 2,930 has been incorrectly recorded in your cash book as 2,390. As you can see, we have another practice error. Now because this is a payment, the incorrect amount will be debited and the correct amount will be credited. Now all your transactions have been inserted in both your reconciliation statement and your supplementary cash book. But we are not done. Let's look at the supplementary cash book. You have to look and see which side carries the most amount of money. And in this case, it's the credit side. Now what you do from here is you add up all the amounts on the credit side and put them under both the debit and credit side because both sides have to balance. Remember the accounting equation we did the other day? Go look up that video. From here, we subtract the amounts on the debit side, basically the lesser amounts, from the total amount, which are basically the amounts on the credit side. That is when we get our balance carried over as well as our balance brought down. Now the balance carried over is the balance that closes the books basically, and the balance brought down is the balance which will be used to open the next month's balances or books. Now let's move to the reconciliation statement. On the reconciliation statement, we will subtract our debits from our credits or our credits from our debits, depending on which amount is more and which amount is less. In this case, our debits are more than our credits, meaning we subtract our credits from our debits and we end up with a total amount of 616, which is the same as the balance from the cash book. Now this is how you know your books have been balanced, because the amount on the reconciliation statement is the same as the amount brought down on the supplementary cash book. To wrap up, Bank reconciliation is not just about matching numbers. It's about ensuring accuracy, spotting errors, and keeping your financial records clean. By adjusting both the cashbook and the bank statement step by step, we ensure that both sides align with the final total. Remember, in the end, the totals should subtract each other until you arrive at the same adjustment. Thank you for watching. Don't forget to subscribe, like, and share. This is City Education, your home for education in all shapes, forms, and sizes.